Hello and welcome to another edition of Investing for Generations. And today I want to talk about another stock out of my portfolio. And this time it's the legendary Berkshire Hathaway. We will talk about the company at all, about the history of the company, then of course about the two men at the management, about the price, and I will explain why I think Berkshire Hathaway is almost the perfect long-term investment with almost zero risk. So let's start. But before we start, don't forget to subscribe, like, share, and comment. Thank you. Berkshire Hathaway was founded in 1839. Originally, it was a textile manufactory, and in 1962, Warren Buffett bought his first shares in the company just as an investment. And 2 years later, the owner of the company just made him a tender offer to buy back his shares. But later then, there come the writing offer, and this was way lower than the oral. And so Buffett was very concerned and very angry, so that he bought all of the company and just took control over the company and threw the owner out of the door. But all of this textile industry wasn't running very well, so Buffett closed the manufactory and bought into the insurance first in 1967, and the rest of it is just history. And he built over the years, over the last more than 50 years, this big conglomerate of Berkshire Hathaway. And in this conglomerate we have two big parts. The one part is the wholly owned companies like Geico, Duracell, Fruit of the Loom, all you can see here on the left side. And the other is the part where Berkshire Hathaway have a significant stake into, like the banks of Wells Fargo, Bank of America, Goldman Sachs, or lately Kraft Heinz, Apple, of course, which is the biggest part in the portfolio of Berkshire Hathaway by a mile right now. And this is not very actual here because, as most of you will know already, Buffett just sold his stakes in the airlines. Yeah, this was very spectacular, at least for the media. And of course, he lost a lot of money there. But relatively to the market capitalization of Berkshire Hathaway, it wasn't really much. So this was a mistake, but it wasn't a big mistake like you would think if you follow the media or follow even YouTube or other YouTube channels. So then just start into the financial numbers of Berkshire Hathaway. And of course you can look at Berkshire Hathaway as a normal company, and for example you can look at the revenue. And when you look at the revenue you just see that there is a growing just forever. Over the last 5 years the growth was around 5%. And you could also look at the balance sheet and you will find absolutely no debt. But it just makes not a lot of sense to look at Berkshire Hathaway like every other company. I will make today kind of a different analysis. So let's start with that. As I explained in my other videos and even more in my latest videos, the value of a company is nothing else than his future earnings. And so you can calculate intrinsic value and you can see if stock is cheap or overvalued or undervalued. Today I will try to analyze this for Berkshire Hathaway, and I will try to explain why I think Berkshire Hathaway at the current price is a bargain and is an impressive long-term investment. So what we have to understand always, and with Berkshire Hathaway even more, if you buy stock, you buy the company, you buy the business. The earnings of the companies which Berkshire Hathaway full owned were 23 $8.3 billion in 2019. The earnings of the portfolio Berkshire Hathaway have in 2019 was 8.3 billion. And this is just the top 10 of this portfolio, is not the whole portfolio. Therefore, we have total earnings in 2019 for Berkshire Hathaway, or out of the companies which Berkshire Hathaway owns fully or just a stake of, is 31.6 billion. We have a market capitalization currently of Berkshire Hathaway of 431 billion. Therefore, with the total earnings to the market capitalization, we have a PE ratio, a price earnings ratio of 13.6. But then, as you maybe know, or a lot of you will know, Berkshire Hathaway have a big amount of cash of 137 billion right now. If you subtract this from the market capitalization and you look that you have earnings of 31.6 billion, earning ratio is 9.3. We have a return of 10.7%. So of course you can say, yeah, but with the recession looming and maybe the depression looming, the earnings went down, and then the return will be maybe not that high, and that's very likely. But if you believe in the market system, and if you believe even more in the American economy, then it's also very likely that we will return to the earnings we had in 2019. And of course, over time, it's very likely that the earnings will just get up. And then Berkshire Hathaway, with all the companies and with all the stakes in the companies, will also make this return. And it's very likely for me that this return will be at least 10% per year over time. And of course, sooner or later, Buffett will invest this 137 billion in cash, maybe in buybacks in their own stocks, or even with investing in good businesses. But for a lot of reasons, it's not very easy for Berkshire Hathaway to invest this 137 billion. Maybe I will make another video about this and why this is so difficult. And you can find all these numbers on the website of Berkshire Hathaway. And yes, that's the main page of the website of Berkshire Hathaway. This looks like maybe like, yeah, beginning of the 90s. It's so simple. Yeah, simplicity is beautiful. And there you also find financial reports. And there you can find all the numbers I told you before. For example, here, the earnings of the top 10 companies in the portfolio of Berkshire Hathaway. And at this point, I want to give a big thank you to Sven Carlin, also a YouTuber here about financials. And this man is incredible, and I learned so much about investing from him. So I recommend his channel a lot. Just look there. I will put a link in my description so you can find it. Go there and enjoy. At this point of my analysis, I talk about the management, but not too much to say this time. Because these two incredible people just made history. What can I say? Everything is told about them. If you just need one picture to explain if this is a good management or not, just look at the performance of Berkshire. So that's the performance of Berkshire Hathaway versus the S&P 500. I think there's nothing else to say about this. Just look at it, and then you can decide if Berkshire Hathaway have a good management or not. Then next, talk about the price. Currently, Berkshire Hathaway is traded at $177. And the intrinsic value for me is at $220. So the margin of safety is around 20%. And I bought my shares at 3 different times for an average $185. It looks like Berkshire Hathaway right now is a very good investment. And with every drop down, it's even better. The only question you have to answer for yourself is, do you want to bet against the American economy? Just let's see what Warren Buffett said about that. And Warren Buffett just said it's never paid to bet against America. If the American economy will struggle that much that Berkshire Hathaway isn't a good investment anymore, then I guess all of us have even bigger problems than that. So what's my conclusion then? My conclusion this time it's very simple. We have with Berkshire Hathaway a company with long-term high returns, very stable returns. You can expect, as I said, around 10%, and almost zero risk, at least if you believe in the American economy or in the economy at all. It's the perfect long-term investment, and I will add to my shares, and I'm very happy with that. Then just take a look into my portfolio. As you can see, my portfolio just filled over the last few days when I analyzed all of my stocks. And you can see now that Berkshire Hathaway is just at the biggest stake in this portfolio with 8.6% right now. And as I mentioned before, I will just add to this, at least to the prices we have right now. And if the price just drop, with every drop, I will just add more and more and more because, as I said, Berkshire Hathaway is a perfect long-term investment. It's kind of a pension plan. Then just take a short look at the performance of my portfolio. As you maybe already know, I started this American portfolio at the 2nd of December 2019. And since then, my portfolio outperformed the S&P by around 12.5%. That's nice. It was a little bit more before, but even 12.5% over a span of a little bit over 6 months. That's nice. And yeah, just let's see how this will work out. So that's it for today. I hope you enjoyed. And we see the next time with the analysis of another stock out of my portfolio. But before we finish, don't forget to subscribe, ring the notification bell to never miss another video, and give me a thumbs up if you really liked the video. I'm very happy about everybody who joined me on my journey. So, see you the next time. Take care. Bye bye.